Hi, this is Lara at Elliott Wave Gold with your daily analysis for Thursday, 21st of May, recording the video almost 5 p.m, 5 minutes to 5 Eastern Standard Time on the 21st Eastern Time. I was expecting for the very short term a little bit of downward movement below 1204 and then for price to turn up. That's pretty much what we're getting. We're seeing choppy, overlapping sideways movement. We have another small red candlestick that fitted what I had expected yesterday to show. At this stage I have 4 wave counts and all of them expect, at least for the short term, some upward movement at least above 1212.96, probably to about 1217. When that's done, I think we're more likely to get some downward movement. This B wave is not over yet. Let's have a look at the wave count at the daily chart level. The bull wave count sees gold within a new cycle degree trend for a B wave to last 1 to several years. We have a 5, 3, we need a 5 up at intermediate degree. Within this intermediate wave, 5 wave structure, we have a first wave leading contracting diagonal unfolding. We have a zigzag for 1 and 2, a zigzag for 3 most likely to be over here, a zigzag down for 4 unfolding. The diagonal is contracting because the third wave is shorter than the first wave, so the fourth wave has a limit. It may not be longer than equality in length with the second. It shouldn't move below 1178.08. When it's done, we'll expect a final fifth wave up, which for a leading diagonal may not be truncated. It must move beyond the end of the third wave. The rules for a leading diagonal are the second and fourth waves must be zigzags. The first, third and fifth waves are most commonly zigzags, but they may also be impulses. Because they are most commonly zigzags, I'm seeing this upward movement as a zigzag. That's the most likely structure for this third wave. Let's have a look at this at the hourly chart level, where minuet A ends up here, this point up here. So if minute 3 is a zigzag, it subdivides 5, 3, 5. All the subdivisions fit reasonably well here. The only problem here is that microwave 4 is grossly disproportionate to microwave 2, but they do exhibit good alternation. Within minute wave 4 we have a 5, incomplete 3, then we'll need a 5 down, probably to end when price touches this pink 2-4 trend line. So I'm going to use this pink line as a guide rather than a price target because I think this will be more useful for minute wave 4. That would see it end within the normal range for a fourth wave of a diagonal between 1191.66, the length of minute 3, and 1182.81, the length of minute 3. Within minute wave 4 zigzag, we have a 5 wave impulse for minuet A and an incomplete, very common expanded flat correction for the B wave. They subdivide 3, 3, 5. At 1217, subminuet C will reach 1.618, the length of A, and that would be the most typical ratio for a C wave within an expanded flat. This wave count sees this upward movement, very importantly, as a 3-wave structure, and at the 5-minute chart level, that's the only solution I can see. This fits as a double zigzag. So this wave count for the bull does have a much higher probability than its alternate. Subminuet C is extremely likely to move at least slightly above the end of A at 1212.96 to avoid a truncation and a very rare running flat. Minuet B may not move beyond the start of A above 1232.49. When I know where minuet B has ended, I will calculate a price target for C. It should be within this range and it should see price touch this lower trend line. At any stage, a new low below 1200.03 would invalidate the alternate bull count and confirm this main bull count, which I think has a higher probability. This is the alternate bull count. It looks at the other structural possibility for minute wave 3, that of a simple impulse. 1, 2, 3, 4 really should be over and would need 5 up. Most likely to move beyond the end of 3. The target for this one would see it do that. Let's look at this idea at the hourly chart level where the high of 1 is this point here. So we have a 5, 3, 5, 3. This idea needs a 5 up. At 1232, the fifth wave would reach equality in length with the first wave. It would not be truncated. It would see price move beyond the end of the third wave and almost level with this point here. This fourth wave may not move into first wave price territory below 1200.03. There is more than one way to see this third wave and this fourth wave. This wave count has a better Fibonacci ratio between minuet waves 3 and 1. It's extremely close to 1.618, and this wave count has some alternation between this fourth wave as an expanded flat and this second wave as a zigzag, so there's good alternation. But the big problem today with it is this downward movement looks like a 3 on the hourly and 5-minute chart. It doesn't look like a 5. It doesn't have a very good fit either. Here, this upward movement must be seen as a 5, and I still can't see a solution for that at the 5-minute chart level, so the subdivisions here do not fit. So this alternate has a lower probability. This wave count expects upward movement to 1232. That could unfold over the next 1 or 2 days, but this idea has a lower probability than the main bull wave count. This is the bear wave count, which sees cycle A in primary 5 incomplete. The targets are the same, the confidence points are also the same. We're seeing a 5-3-5 zigzag unfolding up for a minor degree second wave correction, which is now, I think, in its 48th day. I've looked back over impulses trending lower for gold, and within its intermediate degree impulses, its minor degree corrections usually last only up to about 20 days. This one is over twice the duration. It's actually quite huge in terms of its size. It's starting to look very strange, and the structure is incomplete. There are two structural possibilities for minute wave C, and so we really need to be considering both. It can be either an impulse or an ending diagonal. It must be a 5-wave structure, and those are the only two 5-wave structures. It's more likely to be an impulse than it is a diagonal, so that's my main wave count for the bear, although it doesn't actually have as good a fit as the alternate ending diagonal. Let's look at the impulse at the hourly chart level, where the high of 1 is this point here. So we have a 5, 3, 5, 3. We need a 5 up. At 1, 2, 3, 2, the fifth wave would reach equality in length with the first wave, and it should take price at least to the end of the third wave, if not slightly higher. So this target may be slightly, ever so slightly too low. I've resolved the problem of this downward movement looking like a 3 here. It should be a 3 if minute wave 4 is a zigzag, and it should be over down here. But now we have other problems. There is inadequate alternation between the zigzag of the fourth wave and the zigzag of the second wave. There's some alternation, there's just not very much. The second wave is deeper than the fourth, and the second wave had a short A wave and a long C wave. The fourth wave is a bit more shallow than the second, and it has a long A wave and a short C wave. So there's a little bit of alternation, but less than gold normally exhibits. There's a problem here within the B wave. This upward movement has to be seen as a 5 at the 5-minute chart level, and it just won't subdivide well at all as a 5. It only fits as a 3. Minuet 4 may not move into wave 1 price territory below 1200.03. If we get a new low below that point in the next couple of days, which I actually think is quite likely, then this will be the wave count I'll use for the bear. It looks at the other structural possibility of minute wave C, that of an ending diagonal. For this one, the diagonal would be expanding. They are not as common as the contracting variety, which is really the only reason why this is an alternate wave count for the bear today. But it has a better fit in terms of subdivisions. I've checked the subdivisions. Minuet 1 can be seen as a zigzag. Within an ending diagonal, all of the subwaves must be zigzags, and the fourth wave must overlap first wave price territory. So we have a zigzag for 1, a zigzag for 2, this fits nicely. A zigzag for 3, this can fit as a zigzag. We've got a rather long A wave and a short C wave. Here we have a zigzag unfolding down for the fourth wave. So this idea is quite similar to the main bull wave count, which I prefer. This fourth wave zigzag is unfolding 5, incomplete 3, and a 5 down. So again, we're seeing an expanded flat 3, 3, 5 for a B wave to end at 1217, where C reaches 1.618, the length of A. C is extremely likely to move beyond the end of A above 1212.96, and here we're seeing this upward movement as a 3-wave structure. That has a perfect fit at the 5-minute chart level. When I know where B ends for this idea, then I'll calculate a target down for C for you. It should take my minuet 4 to within the normal range of a fourth wave of a diagonal between 0.66 at 1198 and 0.81, the length of the third wave, at 1189. It must move below 1200.03 because for a fourth wave of a diagonal, it must overlap first wave price territory. This one is expanding, so the limit for the fourth wave is it can't move beyond the end of the second wave below 1179.03. So the idea for this preferred alternate bear wave count, preferred because the subdivisions fit better, particularly this, is pretty much the same as the main bull hourly wave count. Subminuet B may not move beyond the end of A above 1232.49. If for the main bull hourly count, which I prefer, and for the bear count, that alternate count, which has a better fit and I slightly prefer, despite it being an alternate, they're both expecting a bit of sideways movement and then some more downward movement. That actually fits quite nicely with the regular technical analysis picture today. ADX for yesterday's data slightly declines. We have a slight dip down and it's comfortably below 15 at 13.8. That indicates there is no clear trend. Gold remains range bound. It's in a sideways consolidation phase that began back here. Price is again within this range below resistance and above support. So we should expect low volatility, short swings, sideways movement. We should expect it to move from resistance back down to support, either one of these two trend lines. It may get down that low, although it may not be able to make it that far. Stochastics has declined from overbought back into normal range, so this may continue to decline until we see it move either at, to, or below back into oversold price territory. So we'd be expecting a continuation of the sideways chop with regular up and down movements, so we're expecting now some downward movement is most likely. However, again, a word of caution, this is a very long, time-consuming consolidation. The longer it takes, the closer it gets to a breakout. So eventually the breakout will come. It's a little bit more likely to be down than up from the regular technical analysis perspective if we take this day and this day using volume as an indicator of the most likely breakout direction, but that picture again is not entirely clear because if we look at these last several days, it's upward days which have strongest volume. So the regular technical analysis picture only very slightly favours a downward breakout, but it's unclear. What is clear is gold remains range bound, and that actually fits with a diagonal unfolding. That's all for me today with your gold analysis, and I hope all our members are having a fabulous day.